Hey YouTube, it's Intellectual Money here. The question of today is, what constitutes a good store of value over time? The answer to this question gives us a clear understanding of the wealth gap and why it does not seem to be getting closer, besides the select few that tend to educate themselves on finances. There are several ways one can store their wealth. Today, I will discuss the ones that I deem to be the best for me at the time of this recording. Please feel free to give any other examples of ones you guys may know in the comment section below, and give examples of why. For starters, the lower to middle class tend to save a lot of their wealth either in cash, depreciating assets slash liabilities, and or in average to below average rate of return investments. The reason being for average ROI investments is either naivety in identifying higher rate of return investments and or fear of severe negative volatility, which is keeping them away from the best investments. So based off of these choices, a majority of the lower and middle class individuals tend to put their money in suboptimal positions, which is not what I'm looking for. There are three particular asset classes that I'm going to be mentioning in this video that I believe are excellent stores of value to either obtain or maybe start beginning to learn about potentially obtaining in the future. Some of you may have guessed it, and to start out, I'm going with real estate. For one, real estate is built on land. And since the last time I checked with the man above, I don't think he's planning on making much more of it anytime soon, which helps us in terms of supply. There is only so much land near desirable or soon to be desirable cities, which is what a savvy investor is looking for. Now, in terms of demand, human beings need somewhere that is privately owned so that they have somewhere to live with themselves and their families. Because of this, demand should not really be a problem as long as the real estate is located in a place or an area that people would want to live into the future. This dynamic of human behaviors and needs should provide you with a healthy rate of return on property appreciation. In addition, providing you with positive cash flow while your equity is also being used as a buffer against inflation as your government continues to devalue their currency. Second on my list, and in no particular order, is a cryptocurrency famously known as Bitcoin. Bitcoin is believed to be the technological disruptor to gold as a store of value over time. If I had to go all in on either gold or Bitcoin, I'd choose Bitcoin because since Bitcoin's inception, it has, by multiple magnitudes, far exceeded the rate of return than gold when compared to gold. Now, it does not have to, but I expect this trend to continue. And to give some perspective, if you invested $1 into gold around Bitcoin's inception, you'd have around $1.50 or so right now, maybe $1.57. But if you invested $1 around that same time, Bitcoin's inception, into Bitcoin, you would see a return of around $5.8 million, just to give you some perspective. Pretty solid numbers for Bitcoin as it takes the crown as the top performing asset of the prior decade. As long as you have the mentality to fight through extreme volatility and to look at macro corrections as buying opportunities, you should be fine with Bitcoin. But however, I'm not a financial advisor, and this is not financial advice. Another positive is Bitcoin is more convenient to store in a personal digital wallet compared to an at-home safe that you have to use to store gold, either a safe or a storage unit of some sort. Even if I go on vacation from my phone or computer, I would still have access to my Bitcoin, and I could buy more, transfer it to another digital wallet, I can sell, And just that's just like added luxury of just transactions like that over gold. Obviously, gold has a finite supply, just like Bitcoin, but we don't actually know how much gold there is on planet Earth or even in the universe. Now, with Bitcoin, we do know, as built into the code, that once fully mined, there will never be more than 21 million um, Bitcoins out there. And that helps us as an investor understand the limited supply aspect of Bitcoin compared to gold. Limited supply is good for keeping value. Last positive I'll mention for Bitcoin is you're actually able to yield farm Bitcoin, which provides you interest on just having to just hold it. As of right now, an app called Gemini is offering 2.05% on your Bitcoin. And it's just, an added bonus on top of the already expected big rate of return that you would expect in holding an asset like Bitcoin over time. Now, if Bitcoin is too speculative for you, you still have the option to hold maybe some in Bitcoin and some in gold, or even just eliminating Bitcoin altogether from your portfolio. It's your choice. Now, even in Bitcoin short history, it has shown a higher rate of return and probably more chances than not to continue that. Bitcoin does not carry gold's long-standing track record of being a store of value against inflation, and some investors will cherish that, and no matter what Bitcoin does in terms of whether it succeeds or fails, they'll still rather want to hold their cash in gold, their money in gold, and that's perfectly fine. And this is why gold is on my list as the last store value play. Gold has survived through many generations, nations, public scrutiny throughout its centuries. Even so, it stands today as a universal store of value, and I don't think it should be overlooked just because of Bitcoin's recent emergence. It is a metal that has been used as jewelry, money, electronical components, dentistry, and even in the rockets that we use to travel to space, believe it or not. History has shown us that real estate, Bitcoin, and gold have demonstrated excellent examples of how a limited supply and a consistent or growing demand can provide us with terrific growth over time. And with that, I suggest that any extra cash that's not needed in the immediate or midterm time horizons might be better suited off in one of the asset vehicles that I've mentioned in this video. But it's still important to keep in mind that even though the stock to flow ratios of these assets are good, each asset in and of themselves still provide their own specific types of risks. And it's very important that we educate ourselves on them before just, blindly jumping in and just hoping everything goes well. Risk is a product of many factors, but being uneducated on what you're doing or investing in is where the most risk lies. That is all I have today for this video. Thank you guys for watching. Don't forget to comment down below. Once again, let me know of any other stores of value you guys like. There's baseball cards, there's coin collecting, there's so much other things. Don't forget to smash the like button like Tinder. Once again, thank you guys for watching. I'll see you guys next time.